Hi guys, and welcome to another edition of RenkoTraders.com. In this video we will be taking a look at the price channel trading strategy that I published on the website sometime this week. For those of you who like to trade with price action, this price channel trading strategy is quite simple and easy to use. And at the same time, for those of you who are just beginners to trading with channels or price action, this can be a really simple way to get you started. Okay, so obviously the tool that we will be using is the price channel tool. The MT4 platform has different kinds of channels that you can draw. You've got your standard deviation, equidistant, linear regression, and Fibonacci. Equidistant is one of the most commonly used tool, and it is also known as the price channel tool. But the problem is that with the MT4 equidistant, you don't really have the 50% line or the median line. So to overcome this, we can go to channels and select Fibonacci, where we can set the 50% level. Now bear in mind that this is not the default settings for the Fibo price channel. In fact, this is how it looks when you apply the Fibonacci channel for the first time without any configuration. You've got your fib levels on the channel, and we're not really interested with these levels, so all you do is double click on the fib channel and click on properties, delete all the settings and add minus 0.5, and that's how you get this median line. So now that you have your fib channel that's configured, the next step is to understand how to plot the channels. In an uptrend, you look for a low, then you look for another significant higher low, and look for the high that's formed between the two lows. So you find a low and then a higher low and then spot the high. Once you find this pattern, click on the first reference point and drag the tool towards the second reference point. Then double click on the Fibo channel again and just drag it to the third reference point, and there you have it. Similarly, in a downtrend, you would be looking at a low, you would be looking at a high, a lower high, and a low between these two reference points. So select the first point, drag towards the second reference point, and then slide down the line towards the third reference point. So I hope this is clear on how to draw the price channels on the charts. Let's get started with the strategy. Now the first thing we need to use is we need to understand is the trend that's occurring in the chart. The price channel trading strategy is a counter trend setup. So you are basically looking at trading the retracements that occur within a trend. Some of you might find it easy to just look at the chart and determine the trend, but for many who look for a more non-subjective way of analyzing the trend, I would suggest you take the help of moving averages. Here I'm using a 50 and a 20 moving average, but it's basically up to you on what moving averages that you want to use. Okay, so now that you've got your 50-20 EMAs lined up on the chart, you can clearly see that the trend is up or down. Once you have a trend that's formed, like right here, which is a downtrend, you find your reference points and plot the Fibonacci channel. You can play around with the channel a bit until you find a perfect or a more meaningful setup that's formed. Okay, this looks fine. And once you have your price channel that is in the same direction as the trend, you then wait for a breakout and then trade these counter trend moves. Like as you can see, you've got this, which is a counter trend move against a longer term downtrend. Okay, so now let's define the rules for trading this particular setup. Here we've got an uptrend, and I've got my price channel. So what you have right here is a median line failure or a price channel failure. What you need to look for is a reversal bar that's typically formed to the downside when you're looking at a rising price channel, and you wait for the breakout. Likewise, in a downtrend where you would be plotting a falling price channel, you need to look at the median line or the reversal that happens in the upper half of the price channel. Okay, so far we've learned that you apply a 20-50 moving average to determine the trend. We've also learned how to configure the Fibonacci tool. We've also learned how to plot the Fibonacci tool on price. And we also know that we need to wait for the reversal failure near the upper half when the price channel is falling and price is in a downtrend, or you wait for the price reversal at the lower half if you're looking at an uptrend and the Fibonacci channel is sloping upwards. Okay, so let's take a look at this setup again. No, we don't have that particular pattern that's formed right here. Let's try out this section. Okay, now this example is not a textbook example, but it does illustrate the pattern that we're looking for. Once you determine the trend and you've plotted your Fibonacci channel, you need to wait for the reversal pattern right here, which in this example you can see price chopped around a bit before pushing higher. Now once price breaks out after this failure, you need to wait for a retracement to happen. This retracement should typically happen outside of the price channel. In some cases, you can expect price to rally by breaking out from the Fibonacci channel only to retrace back into the price channel, and that is an invalid setup. So wait for the median line failure, a breakout from the price channel, and then a reversal. Once the reversal happens, you simply click on your Fibonacci tool and set it to 200 and 300%, which is a 1:1 and a 1:2 risk reward setup. You place your stops at the retracement low. You have your entry at the high of the retracement. This is your 1:1 risk reward, and this is your 1:2 risk reward. So there you have it. This is how we trade. Now let's take a look at a few more examples. Right here we've got price moving to the upside, and here you've got the failure. You have price falling low and then retracing back. You click your Fib tool, set your stops right here to the high, entry 1:1 risk reward, 1:2. So price action is still evolving right now, and we had T1 hit and prices rallied back, so probably Aussie dollar could be looking towards hitting 0.744. Okay, let's take a look at a couple of more examples. This is the USD CAD. You've got a nice uptrend here. You've got a high. You have your reversal pattern right here. And this is invalidated. Because as you can see, the retracement occurred back into the price channel. Let's see if this particular pattern has any validity. No, not again, because again in this example you can see that there was no failure at the middle line, and instead prices fell back sharply. So that would have been a difficult setup to trade, because you wouldn't know how prices would react. Okay, this is a pattern that's quite interesting because first of all it's very steep, and the price bounces have been very low. You've got your reversal right here. You can see that price fell and then reversed quickly without interaction with the lower end, and you have the breakout right here. And right now we're waiting for a retracement. Now a good way to expect a retracement is quite simple, which is the breakout rule, where prices usually test the breakout level before pushing higher. So if price is close back towards 1.3134, then I would be looking at taking a long position in USD CAD at 31745 with targets at 32145 and 32545 with the stops at 31345. Let's look at dollar yen. Now this is a good example because you can see here that prices have been in a very long downtrend, and the question may be, how do you trade such kind of setup? Well, first of all, when you're trading, you really wouldn't know how long the trend would continue. So all you would be doing is focusing on the little retracements that do occur. In this case, you had a failure and then a breakout, and then you had a retracement, but price did not break out higher. So this was a setup that would have probably expired. Let's take a look at what's happening right here. Okay, this is quite an interesting setup because you've got your downtrend here and your reference points lined up. You've got your reversal here, and right now prices are moving up. Hopefully, if there is a retracement, I would expect it to come back towards 102.01, and my targets would be 109.54 and 107.04, which is right at the first reference point, with the entry at 105.5, 104.54 and 102.01. So guys, I hope this video has been clear. To summarize the trading strategy, it's a very simple setup using the price channel tool. We make use of the Fibonacci channel. You have your moving averages of whatever values you want to set up to determine the trend. Find a reference point of high, a lower high and a low within a downtrend, or a low, a higher low and a higher high within an uptrend, and wait for price to do a reversal near the median line. Wait for a breakout, then wait for a pullback, and then set your long or short orders accordingly. I hope the video has been clear. Do test this out on a demo account, and if you have any questions, feel free to use the comment box below. Thank you, and have a good day.